Two lines pop out first. Don't blink or you'll miss them. XRP only needs coffee money inflows to mint trillion-dollar status. But the clock is already ticking and Wall Street's kettle is whistling. Right. So here's why I've been pacing around my apartment like a caffeinated squirrel all morning. I woke up to this spicy little nugget. Now, according to Elon Musk-backed XAI and its always cheeky Grok bot, XRP could catapult from today's $140 billion valuation to a jaw-dropping $1 trillion market cap with inflows that barely break a sweat. Something in the kind of ballpark of $4 to $9 billion. Yeah, billion with a B, not trillion. So that's the opening loop then, right? If you've already kind of have a rising eyebrow, well, hang around because the maths are as wild as they sound. The ETF dominoes are in fact lining up and the timeline is closer than your next haircut. Okay, so picture this, right? I'm staring and stirring my espresso, no milk because lactose intolerance and crypto Twitter drama, they don't mix. And I'm scrolling through yesterday's market tape. XRP is sitting at around $2.39 a coin. There are 58 plus billion tokens in circulation. Total market cap roughly around 140 billion. Nothing crazy at first glance. Then I see April 12th numbers, a measly $12.87 or $12.87 million in net inflows sparks a $7.74 billion jump in market cap. That's a 600 to 1 multiplier, right? 601. So now, of course, you know, Grok's kind of tamps that's a multiplier down to a more grown-up 200x, you know, to keep expectations realistic. But even with that kind of haircut, the story is still bonkers. Crunch those numbers and you'll actually realize an extra $4.3 billion could unlock the missing $860 billion needed to hit a round, at least a kind of round as it kind of gets trillion-dollar cap. So here is where the plot thickens a little bit, like a proper oat milk latte, if you will. JP Morgan's desk reckons first-year inflows into brand new XRP ETFs could run $4 billion to $8 billion. Now, you see that overlap, right? Grok says that $4.3 billion, JP Morgan says, hey, we've got $4 to $8 billion on deck. So that's the sort of alignment that kind of even my croaked IKEA shelves, you know, could never really achieve. Suddenly, the crazy looks, well, a hell of a lot less crazy. Now, ETFs. Shout out to 𝗕𝗘𝗪𝗰 for firing the starter pistol on April 8th. Their 2x long daily XRP ETF, ticker XXRP, dropped on New York Stock Exchange, ARCA, with a modest $5 million first day volume and still ranked among the top 5% of US ETF launches ever. Double leveraged, mind you. Now, if XRP runs 3%, the ETF pumps 6 and vice versa, right? It's basically espresso on steroids. Great for thrill seekers, terrifying for anyone who panics over a 2% red candle. Now, and even 𝗕𝗘𝗪𝗰 is even kind of prepping an inverse product for the doomsday crowd. ProShares wasn't about to be left at the altar either. Their trio of XRP future ETFs was to go live on May 14th, and they've quietly filed for the grand prize, a spot XRP ETF. And the application, or that application, is still warming in the SEC's kind of serious kind of vending machine, if you will, but the aroma is unmistakable here, right? Now, meanwhile, of course, you had Brazil scooped the US, or at least, scooped the US, I should say, on actual spot arrival, right? Hashdesk's XRPH11 hit their exchange on April 25th with roughly $40 million in AUM and a 95% XRP allocation. And if you're kind of a football, if you're into football and you're like a football analogy kind of person, maybe you are, then think of Brazil kind of dribbling past everyone while Uncle Sam ties his shoes. That's kind of what happened there. But if we zoom out, the 9 heavyweight asset managers, Grayscale, Bitwise, Franklin Templeton, 21 Shares, and their big money friends have spot XRP proposals clogging the SEC's inbox. Key dates? Well, Grayscale's D-Day is May 22nd. Franklin Templeton peaks over the kind of, I guess the desk at around June 17th. And analysts who usually kind of hedge harder than a Vaseline's kind of maze may actually say proposals could land by Q4. And the kind of legal mud wrestling between Ripple and the SEC wrapped up in Ripple's favor last year, and the current US administration is striking a more crypto-friendly tone. So regulatory runway, at least runway, kind of looks clearer than it has done in, well, ever. But, it's a big but. Multipliers don't always stay lofty, right? If the hype cools and the leverage effect kind of halves to 100x, well, you would need $8.6 billion in fresh cash to cross that $1 trillion level, right? Still peanuts compared with Apple's daily market cap swings, but notably chunkier than $4 billion. Now, conversely, of course, if XRP keeps flexing its historical 600x mojo, well, the dream becomes hilariously cheap, right? $1.43 billion nudge pocket change on Wall Street. In that scenario, one golden kind of fund manager could sneeze and accidentally trigger XRP's moonshot. So let's hit pause and talk real world friction. Liquidity dries up when you least expect it, right? Big inflows can also invite equally big profit taking. Long-time bag holders love a good exit pump, right? So then there's XRP's escrow releases to consider, right? Ripple still unlocks 1 billion tokens every month. Even if most of it gets reloaded, I think it's like about 80-20. They use 20% and they lock up the 80%. And geopolitical curveballs, macro headwinds, and one cousin who, sells the top every single time you tweet bullish emojis, well, the multiplier could compress faster than you can say quantitative tightening. And that's the kind of elephant, actually, more like a whole safari in the room. Still, the ETF pipeline keeps stretching. Leveraged? Check. Futures? Check. Spot? Practically inevitable if those 9 applications don't all trip over the same bureaucratic kind of shoelace. And here is the kicker, right? ETFs are force multipliers themselves. They tap pension funds, robo-advisors, company treasuries, capital sources that wouldn't touch a self-custody wallet if you paid them in hardware ledgers. There's a link to Ledger, by the way, in the description below. If you haven't already got one, you should probably look into that. Anyway, if each of those verticals kind of trickles a few basis points towards XRP once an ETF ticker lights up on Bloomberg's terminals, well, we could see a feedback loop. Inflows raise prices boost sentiment, sentiment drives market budgets, and markets, or at least marketing, I should say, attracts more inflows. It's kind of a flywheel city. So let me bring this down to something that you can feel without a Bloomberg subscription then, right? Imagine you're on your lunch break, phone in one hand, burrito in the other, right? A push notification pops up. SEC approves first spot XRP ETF. You swipe up, but buy a kind of tiny slice through your vanilla investing application because why not? Multiply that by 3 million other retail traders plus retirement funds quietly rebalancing their alternative asset sleeves. And well, that's how $4+ billion gets conjured out of thin digital air. But will it stick, right? That demand I guess depends on narrative, right? Now, Bitcoin had digital gold. Ethereum has kind of programmable money. Solana is pitched as Visa on chain. maybe if they can stay online. XRP has long kind of waved the kind of bridge asset for global finance flag. So with the court win in its kind of back pocket and banks already kind of testing on-chain settlements, the story finally actually has legs, and Wall Street, ironically, is a sucker for a good story, especially one that fits on a PowerPoint slide between, allocation pie charts. Now, here's a personal confession. I used to shrug at XRP because the community felt like an echo chamber yelling $589 memes. But raw numbers are very hard to mock, right? $4 billion influx nudging a $1 trillion market cap. That is the kind of thing that kind of keeps traders up at night, right? It's equal parts of fear, missing out on, missing out and fear of kind of potentially getting wrecked, right? And you can cue my espresso habit here. And of course, speaking of communities, if you want the day-to-day banter, chart spam, or just kind of a roast of my caffeine addiction, hop into our free crypto Discord server. There's a link chilling in the description. Right? We break down moves in real time, we share TA, and yes, occasionally argue about whether avocados belong on blockchain, right? But we also, if you're kind of hunting for a trading venue that doesn't feel like the 1990s, right? Website kind of slapped to the moon, right? Check out Blowfin via the link that's in the description down below and start trading with what I swear is the best up-and-coming crypto exchange out there. It's got low fees, it's got a slick UI, and they haven't even rugged me yet, right? Obviously, I joke. High praise, of course, in this industry because, let's face it, a lot of these older exchanges, they just haven't really kept up with the times. Okay, so let's crank it back to the capital math before we kind of wrap up today, right? XRP at $17 equals $1 trillion in market cap. For context, Ethereum flirted with $500 billion during the last bull run. Apple is currently sitting above $2 trillion as we speak, and a single-digit billion inflow flipped into 12 digital market cap, is basically DeFi wizardry meeting TradFi sprinkler systems, right? And because XRP's circulating supply, won't suddenly shrink to Bitcoin levels, price appreciation relies heavily on demand outpacing unlocks, right? And that's precisely the scenario that ETF engineers, right? Now, they kind of create synthetic price agnostic demand from portfolio rebalances. The biggest near-term risk is the SEC foot dragging, right? If those decision dates kind of get punted again, right? Sentiment kind of sours, multipliers deflate, and we're back to grinding support lines on TradingView. But the agency has already kind of greenlit Bitcoin spot ETFs, kind of signaled, openness to Ethereum multiple times over, and lost key battles against Ripple. Odds of blanket denial across 9 XRP filings feels similar than, at least slimmer, I should say, than my Wi-Fi during a lightning storm. And if approvals land, watch volumes, right? Their modest $5 million day one that we saw, still kind of smashed historical averages. Imagine that number with a $500 million sticker, then multiply by 3 new pro share funds and a couple of heavyweights from Grayscale and Frankleton, right? That's kind of where we test Grok's 200x theory in real time. We will either see the multiplier proves true, or we find out if it was kind of held together with duct tape and moon emoji tweets. Either way, volatility fans will be getting their popcorn ready. Okay, so quick mental experiment before I let you all go, right? You've got 2 scenarios. You've got scenario A, right? You need $860 billion actual cash to grow XRP's cap by the same amount. Almost impossible, right? In scenario B, you need $4.3 billion because every fresh dollar gets echoed 200 times by market psychology, liquidity depth, and order book gymnastics, which is just me simplifying this down. Now, which scenario do you think kind of hedge funds, quants, and TikTok traders are actually betting will happen? It's exactly that. That is why Grok's projection, once trimmed down to earth, still feels like a trampoline with an enter at your own risk sign. So here are my closing thoughts while I polish off another espresso. Markets adore simple, round numbers. Bitcoin at 100,000, Ethereum at 10,000, XRP at $1 trillion market cap. Now these milestones become self-fulfilling memes. Add, structural demand from ETFs and institutional FOMO, sprinkling a dash of regulatory clarity, and suddenly the absurd looks inevitable. Now, will it be smooth sailing? Absolutely not. But if we're even half right, the next year could turn crypto Twitter into an even louder circus than usual. And that is saying something.